Hi everyone, Tom Brody here, the Found Money Guy. I work with companies of all sizes to grow their businesses by finding money in places they never even knew to look. Recently I realized that I may have caused some confusion when I talked about the tax incentives I offer to companies. These incentives actually fall into two categories: tax credits and tax deductions. Now, if you're thinking, what's the difference? Let me explain. If you're talking about a tax credit and a tax deduction that are exactly the same amount in dollars, the tax credit will always offer more savings than the tax deduction. However, there are situations where a tax deduction can have a greater value than a tax credit. Now, I'd like to clarify this with some examples. But first, if you're wondering which one your business should pursue, a tax credit or a tax deduction, that answer is easy. You should go for both. Remember, there is no such thing as a bad tax credit or a bad tax deduction. You're normally not forced to choose one or the other, so you should always look for the most credits and deductions your business can take. So let's first talk about a tax deduction. A tax deduction allows you to exempt a portion of your income from taxes, and its real value will be tied to your effective tax rate. So let's say you're entitled to a $1,000 deduction, and your effective tax rate is 21%. That will result in a savings of $210. Pretty straightforward. But if your neighbor takes that same $1,000 deduction and his effective tax rate is 30%, it'll be worth $300 to him. So you see, two different tax rates give a different result on the same $1,000 deduction. A little different. Now, a tax credit is a dollar-for-dollar reduction of your tax liability, and this reduction isn't impacted by your effective tax rate. So a $1,000 tax credit, for example, will reduce your tax liability by $1,000. So if you owe $6,000 in taxes, but you have a $1,000 tax credit, your resulting tax bill will be $5,000. Now, for the question of which of the tax incentives I offer fall into which of these two categories, let me explain. On the tax credit side is the hiring incentive, or WOTC, the Work Opportunity Tax Credit, and the Research and Development Tax Credit. Under the category of tax deductions is cost segregation. Now, as I stated before, tax credits and tax deductions are things that every company should investigate. And the best way to find out if you qualify for any of these is to consult with a tax incentive expert. Especially if you can get that consultation for free. My name is Tom Brody, the Found Money Guy, and I look forward to speaking to you again real soon.